Good morning, everybody, and this is your Dow Jones day trade setups for today. So pretty interesting. As I warned you yesterday, not an area I want to be short, and we got going short, and then we had this pretty big engulfing bar. Just want to show you something on the daily. That is a fairly bullish sign. So when you gap down and then you rally to close at least halfway up the previous bar, that is a fairly bullish signal. Obviously, we want confirmation, and the confirmation is only on the break of Wednesday's high. Okay, so that would basically give you the pattern and the confirmation. This thing is still a wedge. It's still a pullback from a previous bull trend. So I'd be very, very careful here. Not really looking to buy off this level just yet, but I'm also not looking to be short. So 31,550 is your key line in the sand here, and you can see we on the 8-hour gap below it. That's where it is there, and we came up and closed above it. So that is what we want to pay attention to today. And then there's one other little level here, which is this swing high here, and you can see that also lines up a bit. Sorry, there's one more we need to pay attention to. So those are the three levels we need to pay attention to. We'll get to them now in the lower time frames, but oscillators group to the downside like this, far away from the moving averages, in a wedge, just way too much glaring at me here, saying be careful, we are not looking to fall. So oscillators pretty much pointing to the upside on the 3-hour, and nothing really to write home about just yet. Later today there will be. There is a small wedge here as well within the bigger wedge. There's the trend line there and there. We've had a break, so a retest, and we'll see where the retest is on the hour. That would also pretty much give you opportunities to see where this is going to go. Now we are in a downtrend. Moving averages are all crossed over, and even a retest, well, not a retest, but hitting the wedge target, which will be up here, is still in a downtrend on the 3-hour. So just keep that in the back of your mind, and also on the hour. Look at the oscillators on the hour, not something you want to be paying attention to, looking for longs, as I said. And then you can see there is a bit of structure lower down, so let's add that level in as well. So you can see how long we sat at this area before breaking through, going into the close. So this would be your wedge. Sorry, let's just do that. Tie this up on the hour so it is correct. So both of these areas here would actually be an opportunity to buy if we get the structure we're looking for. So what are we looking for? You can see there's a break and a retest of the trend line right there. So what we're looking for is a pullback onto one of these levels, and we're looking for inside bars, engulfing bars, or pin bars on those levels. And you can see, I mean, there is one right there, inside bar / pin bar off this level, as well as a diagonal. You can see there it is there. And that's right late in the session. I'm not saying you would have been looking for during the session. It was just chaotic. There was nothing really going on. So that's kind of what we're looking for. We've got non-farm payrolls today, so I would stay out of this until that noise is out the way and then see what's happening. At the moment, we've got a crossover. We are above the 155, so in other words, we're trying to reverse the trend on the 15-minute. We just need to be very careful. I think one of the things you need to bear in mind is, when the markets are calm and structured, like pretty much last year, the year before, when they sort of get the period of volatility, then it goes calm, you typically don't take a day to break through your 15-minute moving averages. Normally that can happen in the day within the trading session. So this, what we're seeing now is we tend to break, we tend to stay below it, and then it takes us a full day or two before we actually break through 15-minute moving averages. That just shows you the volatility that we're in. And I mean, just that swing there is a 1.3% 400-point move on the Dow Jones. So oscillators are all over the place, nothing really to pay attention to. But deep down here, if we drop in this level, 31,465, pay attention to it. If we defend it, then you're looking for a continuation to the upside. If we defend this area at 31,550, you're still looking for a move to the upside. If you start dropping below this area here, 31,465, then you're probably coming back to test the wedge. If you drop into the wedge, then you're coming right back into the bottom here, and that would probably turn it into a channel rather than a wedge. So that's kind of my outlook for today. I'm not even sure that I'll be bothering trading at all, and you'll see what I mean. So I can do that, and that would be my channel. So this is truly the line in the sand, 31,744. We start building a base up there. Remember, that is off the 8-hour. See, there's the support that we found there at the moment in the past. So if we start building a base up there, then I suspect we are moving a little bit higher than that. We're coming back to test this swing high here, which is pretty much almost a head and shoulders type structure. But it is also the moving averages retest. And that is kind of also the wedge target as well, is also up here. So lots of coincidental areas where a pullback could go to is 32,400. 32,400 would be a half decent area to be short again. If we get above that, that changes the picture slightly. Anyway, that's kind of my view today. It's going to be volatile. Be careful. It's probably going to be exactly the same kind of price action that you saw yesterday, which in other words means complete confusion and then a strong move when the data comes out one way or the other. Okay, just pay attention to your bigger time frames. This is a warning signal that this could be a bottom that's in, and there's lots of noise around this as well. There's a lot of noise in the market about this being a bottom. So just pay attention. When there's noise like that, it's typical. It's really, really typical of the institutions to create that groundswell and then get everybody trading in a direction. It may be just to get a better short position higher up, but it's normally pretty volatile. So pay attention, guys. That's all I'm saying. Okay, so last time levels are at the bottom, 31,465. If you want to retest and support there, there's an opportunity to buy into that on the lower time frames, and I'm talking between the 5-minute and the 50-minute charts. Let's just do it on the 50-minute chart so you can see what I'm talking about. So that's first level. Second level would be here, 31,550, and then we have another level here, which is 31,652, and then the ultimate level for me at the moment, 31,744. If we hold that on the daily, that would give us fairly strong opportunity to the upside. Wait for the data today. Once non-farm payrolls is in, give it 15 minutes, and then you can start looking at opportunities. What you may find as well, once the data is in, you'll shoot in a direction, either up or down, and then it'll come back to a center point and either turn and continue down if it's moving down, or the same if it's moving to the upside. Very rare that it actually sort of goes in the opposite direction. So just pay attention to that data, ignore it, give it 15 minutes, and then you can have a look at it when it sort of settles down. Okay, anyway, that's it for me today. I hope it helps, and we'll catch up with you on Monday morning. Enjoy your weekend. Cheers for now.